In today's video, we're going to be taking a deep dive look into Bitcoin. I'll give you my predictions of where the Bitcoin price is headed, when we'll stop falling from these all-time highs above $64,000 that we had, and what my future price targets of Bitcoin will actually be. Before we get started, just a quick reminder, if you like this video and this content, do me a huge favor and click that like and subscribe buttons below. It costs you nothing and it really supports me a ton, and I really appreciate it. So let's dive into the Bitcoin chart. Now, if you've seen some of my previous videos, you know that when I first open a chart, the very first thing I like to do is put support and resistance lines onto the chart. These are basically going to be areas where the price has either rejected to the upside or failed to fall through on the downside multiple times in the past. Now, because I've already done so many Bitcoin technical analysis videos recently, I already have these support and resistance lines drawn on my chart, and they're all these blue lines that you can see. And if you go back and watch the previous videos, you'll see that I've actually had these on my chart for a while, and you can now see how successful some of these blue lines actually ended up being. So for example, this one we have down here around $30,000, which we derive from the price action over here. So you can see once we broke out above this blue line right here at $30,000, we tried to come back and fall through it in this price action right here and failed, pushed back up to the upside. Then on our path down here, we again used it as support, again over here as support, again over here as support before price continued upwards. And now that we've come back down to this $30,000 price level, we've used it as support once, almost twice in here, almost 3 times in here, definitely in here for the 4th time, 5th time. So this zone right here, this $30,000 level, and of course this is a little bit above it. This is more in the $31,000 level that we've had these two bounces. But even if we just use these 3 points so far, you can see we've supported $30,000 3 times already and struggled to fall through it. So that's a brief overview of how I get these blue support and resistance lines onto my chart. The other thing you'll see on this chart that I already have is this 1, 2, 3, 4, 5. Now this is a 5-wave structure using something called Elliott Wave Theory. Now in case you've never seen any of my other videos or you don't know what Elliott Wave Theory is entirely, I'm going to give you a quick 30-second introduction. However, just realize that I have a 10-part playlist on Elliott Wave Theory. If you want to learn more, it's over 2 hours of content, so that can tell you how complex it actually is to learn. So 30 seconds isn't going to teach you everything. But here's a general idea. In Elliott Wave Theory, it basically suggests that the market trends in these waves of 5. 1, 2, 3, 4, 5 upwards. Now the 2 and the 4 of this 5-wave structure you can see are pullbacks of the general trend direction. So even though this whole wave is going upwards, the 2 and the 4 are pullbacks of that upwards direction. Once this 5-wave structure upwards completes, we have a ABC downwards that looks something like this. So it's a 3-wave trend that retraces some of the amount of the 5-wave structure. And then the only other key thing you need to understand is that all of these waves, all of the 1, 2, 3, 4, 5, A, B, and C, make waves inside of them and waves on larger degrees. There are always waves inside of waves. So for example, this 8-wave structure, 1, 2, 3, 4, 5, A, B, C, makes up a 1, 2, once again, on a larger degree, on a more zoomed out time frame, and then we go in and put in that same 3, 4, 5 much higher up. Just like this original 1, 2, 3, 4, 5 structure, this all just makes up a 1, 2 to continue more. So as you can see so far in Bitcoin, I already have a 1, 2, 3, 4, 5 structure from our COVID lows in here of March 2020, and now I think we're working on that kind of ABC structure downwards. Now for a while, I thought that we were in some sort of count that had us as 1, 2, 3. We were in some sort of triangle 4 into here, which I originally had us finishing into here, and then I thought we were going to push one more downwards for the 5th wave. Now this whole 5-wave structure would make up that A wave before we went into a B upwards and a final C downwards. However, the triangle is actually getting really hard to count into here because if our triangle finishes here like I originally had it, and a triangle is made up of 5 waves, so it's an A, B, C, D, E, it would be A, B, C, D, E, just like that. Then we need to start this 5-wave, 5th wave afterwards. So this yellow 5 right here needs to have 5 waves inside of it. However, we quickly have a pivot that breaks above this structure right here, above this 4 as we have it. And so that would have to be 1, 2, working on the 3, but the 2 cannot come above the 1. So I no longer think this is what we have. I don't actually think this is a triangle, even though it looks like a triangle. Sometimes the obvious thing isn't always the right one. So in order to understand how this whole count plays in, I'm looking at a few key pieces first of all. The first thing I see is that this is obviously some sort of ABC like this, or some sort of 1, 2, 3 that's forming so far. Those are the first things that I notice when looking at this giant correction right here. ABC or 1, 2, 3, that would mean we're either working on a 4 or the correction could be over. We're headed upwards if this is an ABC and it finishes our correction, or this could just be the ABC, which is the start of the correction. So that still leaves us with a lot of options. I need to dive more into this sort of price action right here. Because if this is not the triangle we expected it to be, then what do we have going on right here? So the next thing I notice with this count is that this price action all through here feels very much like an expanded flat. I very much clearly see an A, B, C throughout this whole price action, where the B comes below the start of the A. So that's known as an expanded flat in Elliott Wave Theory. A, B, C. Now for this expanded flat to actually be valid, it needs to be a 3-3-5 structure. So there needs to be 3 waves in the A wave, 3 waves in the B wave, and 5 waves inside of the C wave. So inside of the A here, I think it's pretty clear. We definitely have an ABC that looks something like that inside of our A wave. Our B wave is a bit larger, but I think we definitely have an ABC that we can make up inside of that. And then the C wave definitely does get a little bit tricky. However, I do think you can get a 5-wave structure even on the 1-hour chart right here. I think there's a couple of different options, but the one I see most is this 1, 2 that's kind of small right through here, a 3 into here, this is the 4 retracement, and up for the 5th of this yellow C. You could potentially think of this as the 1, 2 as well, with some sort of 3rd into here, a really shallow 4, and then a 5th, but I think the retracements of this correction right here as our 5-wave structure makes sense into this C. So I'm going to delete all those little subwaves. That just helps us validate that we do have an expanded flat into here. So now I think there's a couple of different options for the count. The first one is that this first move here is an ABC structure. So we have an ABC here, and then we have another ABC through here. We've kind of got 2 waves that are in between these 2 ABCs, and it's this push up here and then this retracement right into here. So I think the way that this can work is that this first push up is a W, this retracement into here is our X wave correction, and then this whole ABC is our Y. So this would form a double flat into here, a double flat combination. Now I like the look of this because the X is super deep in retracement relative to this W, which is one of the strong guidelines of a double flat combination. So we basically have A, B, C, and then we have this W, X, Y, and now we're forming more movement downwards. So on an even more macro level here, this first ABC is yet another W structure. This WXY double flat combination would be our X into here, and then we'd be forming the Y downwards. Let me turn up the degree on this so you can see the difference here and change the color. So just to go over it once more, from our peak up here, we have an ABC, which forms our W wave. We have a WXY double flat combination to form our X wave. And now we're working on that Y downwards, which would be another ABC. Now the only thing I dislike about this count is that this Y doesn't make a new high relative to the retracement of this W. So we have a truncated Y here. Now it's not that uncommon in a double flat here where it's a very sideways correction to have a truncated Y. However, it's not really that likely. I don't like to count truncations personally. And so if we just take a look at more options, I think I see one more possible way to count this. For now, I'm going to hide this count. Maybe we'll come back to it in just a second. So I'm going to leave this expanded flat on here because I think this counts really nicely and it looks really nice as an expanded flat through here as well. I think the other option that we have is that from our top, we actually have a 1, 2, 3, 4, and then we have a truncated 5th. So we have an entire 5-wave structure down from the top, which would make our A wave. Now, like I just said, I don't like to count truncations, and I think 5th wave truncations are slightly more rare, and I don't like to count them even more than I would prefer not to have that truncated Y. So both of the counts have a little bit off on them that I would prefer not to see, but they're definitely both options for now. So if we have this 1, 2, 3, 4, 5 into here, that would form a larger A wave. This expanded flat into here would be our B wave, and we would still be working on that C wave downwards. Just to turn the degree up to see what that actually looks like, and changing the color into here. So we have this A wave down with the truncated fifth, an A, B, C into an expanded flat for our B wave, and now we'd be working on a 5 wave structure down for this C wave. So in our original count, we have a W, X, Y, and we're working on a 3 wave structure down to finish the Y, and in this one, we're working on a 5 wave structure down to finish that C wave. Now, like I said, I personally prefer the truncated Y over this truncated fifth for now, so I'm going to go back to the original count I had. I think it's slightly better, although if this starts to push into a 5 wave structure down, then we'll know that this was the right count. So it's good to always have multiple of these in mind. So back on our WXY count, like I said, the last thing we need is an ABC structure to finish our overall correction. This whole structure would be a double zigzag because this is definitely a zigzag into here. We get an X wave that's a flat combination, and now we need another zigzag. A zigzag is made up of a 5-3-5 structure. So 5 waves down, 3 waves up, and another 5 waves down. Let's dive into our price action after where we have our X wave into here. Now, since we have so much price action after our low down here, which has extremely high volume, and the push down to this low is extremely sharp, I don't even think you really need to try and count 5 waves into this A right here. It's pretty obvious this is a significant low, and it's definitely sharp enough to qualify as an A. And looking at all the chop into here, there's probably many different ways to count a 5-wave structure. You could do something like this, where you've got 1, 2, 3, 4, 5, and that's probably the main way I prefer to count this because then I see a very clear 1, 2, 3, 4, 5 into my 3 wave there as well. But you could also maybe have your 1, 2 up into here with the same 3rd wave. You could maybe even pull the 3rd wave up into here now because 1, 2, 3, 4, 5 looks like it could be valid in there. Could have an expanded flat into the 4. This could be the 4 and the start downwards of our 5th. As you can see, there are many different ways we could count 5 waves inside of this, and the structure of it makes it look very impulsive, so I'm just going to call this the A wave into here. So now we're looking for that 3-wave structure of a B wave, and I actually think it could potentially be in already. Just like before, I think we've got a flat structure into here for our B wave, something that looks like this, A, B, C. Turning down the degree of that, changing the color so that it's separated from the ABC that it actually makes up, and this looks pretty good for a B wave. If we check the retracement of this B wave from our A with this Fibonacci Retracement tool, you can see it actually comes perfectly to our golden zone in here. This basically means that the B wave retraced about 61.8% to 65% the length of the A wave into here, and it's a perfect spot we like to see it. And furthermore, this A wave into here is definitely a 3-wave structure, A, B, C. We get a 3-wave into our B, A, B, C, and then we get a nice impulsive move for our C wave into here. Again, probably many ways you could count this, maybe 1, 2, 3, 4, 5, because then again, in the 3rd wave, we've got 1, 2, 3, 4, 5 into here. So I love the look of this B so far. So I think it's possible we have the A and the B in of our Y wave that we're working on right now. That would mean that we're working on this little c of the Y to finish our overall correction. Now inside of the C wave, we need yet another 5-wave structure, and it looks like that 2-wave, as of our recent price action, could already be in. That would mean that we're working on the 3 to put the 4 in, and the 5 comes shortly after that. Let's turn down the degree here as well, change the color to separate it, and this is where I would be leaning for our count to head towards. Let's dive into this current price action here and check out that 2-wave. Now, just like before, we're going to use our Fibonacci Retracement tool to measure the depth of the 2. Now, 2s tend to come between that 50% retracement and that golden zone that I was showing you before. Let's pull that retracement down to the 1 and sideways here. So we're clicking at the top here, the bottom right here, and then I'm just expanding my mouse sideways so it covers over the 2 here. And like I said, the 2 tends to fall between this red and yellow line into here. However, a 2 as deep as this blue line, just where we have it right here at the 78.6% retracement, is definitely not uncommon. So this looks pretty good. If it was very shallow, that would have me hesitating that we don't have a 2-wave in, but this looks really good, and our price action off of it is definitely impulsive downwards to start the 3rd wave, just as we'd expect it. So now let's predict out where we think that third wave is going to go. For this, we used our trend-based fib extension tool, which measures the relative length of waves to each other. So let me show you what I mean by that. We're going to click at the top and the bottom of our one wave into here. This will measure the length of the one wave. Now we're going to click at the top of our two right here, and again, just pull sideways, but at the top of our two. So if our price action came to this pink line right here, which is labeled as 1, it would mean that the 1 and the 3 would be equal in value. That's basically 100%, and since we measured the length of the 1 and put it at the start of the 3, if the 3 ended at this pink line, the 1 and the 3 would be equal in value. Now the most common spot for a third wave to fall is between this 1.618 and 1.75. That would have us in the price action around 29,000 to 29,500. So I'm going to place mark my third wave into there. And now let's predict out potentially where that fourth wave is going to go. We'll use another Fibonacci retracement. And for the fourth wave, it's most likely to fall between this blue 38.2% and this red 50%. So I'll put it somewhere in the middle of that, right into here, around $32,000 as a price target. And then I'm going to put the fifth wave down here somewhere at this negative 0.236 on my Fibonacci retracement. And this negative value is basically just a flip of this 0.236 here, but below it instead. So this is what I would have our final price action look like on the correction of Bitcoin on a small degree right here. Let's go ahead and zoom out and see if this makes sense. This would have us finishing our C wave at the end of this 5 right here. Our Y wave would also finish there because it's our ABC of our Y, and that would be the end of our overall correction on Bitcoin around $27,500. Now simply looking at the support and resistance, you can see there's a huge support line down here around $19,500. So it would have been nice to get some confluence down to that $19,500 target, just to give us a little bit of extra confidence of where we're actually headed. The other thing I want to do is measure the length of the W to the Y. Now these tend to correlate either 1-to-1 with that trend-based fib extension tool or 1 to 0.618. So if I just click it from the top to the bottom of the W, again, measuring the length of the W, and pull it to the top of the X into here, and like I said, this golden line and this pink line are the two common spots. That would give us yet another piece of confluence that this would be a good spot for the correction to end into here, because then our W and our Y would correlate by 1 to 0.618, or the Y would be 61.8% the depth of the W. So we've got that little box. Let me pull that off of our chart. I'm going to turn the wave off of this just to keep it clean into here. And there's one more extension I like to pull, and that's the length of this A relative to this white C. So again, we look for the same correlations of about 1-to-1 or even up to 1 to 1.618, just one of those Fibonacci values for the C correlation. So let's measure the length of the A into here, put it at the top of our potential B so far, and there are 3 potential spots for the C to fall that would measure nicely. The first one is up here at this 0.618. However, that wouldn't even have us putting in new lows relative to the A, which would be pretty rare. So I'm going to take that one off as a possibility, and that leaves 2 other really good spots. One is kind of right where we have it, around this $24,500 price target, and the other is between this 1.272 and 1.414, which is actually perfectly at the box that we already have. So I'll leave both of these spots on. So far we have a lot of confluence into this bottom box. Now what that could mean is that this third wave ends up being extended and much further down than we originally expected. So maybe the third wave ends up coming all the way down into this first box that we have into here. This fourth wave does that retracement as we talked about, and the fifth wave ends up coming down to that bottom box that we have to finish our C wave into here, to finish our Y, to finish our 2 wave when zoomed all the way out. So 1, 2. Now, even though the measurements of this small degree that we're putting in right now don't make as much sense with this final 5-wave structure right here, we have so much confluence into this box and a perfect support and resistance zone that would hold us into here, that this is where I would lean towards the correction ending. Now, it's definitely possible we finish inside of this first box from 23,300 up to about 24,500, but my primary target for the correction is definitely down here from about 19,100 up to about 20,700. Now, until we get a little bit more price action into here, we won't know which of these is actually at play. For now, I'm going to hide some of the smaller degrees onto this just so I can continue keeping my chart clean. We've already validated a lot of it, so we don't need to keep everything onto our chart into here. And I think this is good to have so far. We've got 2 targets down here as potential finishes for our overall correction from about $65,000 to either around $24,500 or around $20,000 to finish our correction. Now, just one last thing that you need to know is that because this forms a 1-2 on a larger degree as I have it right now, from our COVID lows, we get the high up here for our 1. This whole thing would be our correction for our 2. What that means is that afterwards, we're going to be heading for much higher all-time highs. Because next up would be the third wave. And like I said before, that third wave tends to come to a 1.618 to 1.75 extension. So let's see what that target might look like. Measure the length of our 1. I'll put it at the very bottom of our lower box to get a conservative estimate for our third wave, and that would put it up into this zone into here, around $120,000 for our third wave. Then we'd have a nice pullback for our fourth wave, and one more wave up for our fifth wave that could potentially be above $130,000. However, until we see more price action finishing down here, it's hard to predict where those final targets will be, but that gives you a good idea of the upside potential of Bitcoin after this correction. So with all that being said, if we come down into this bottom box right here and you're at all interested in purchasing Bitcoin, this is absolutely the spot to add more Bitcoin or add your first Bitcoin to your portfolio, because the upside from here will be enormous. So if you made it this far, you probably like the content in this video. Just a couple quick things. 1, please do me a favor and click that like and subscribe buttons below. This really means a ton and supports me, and I really appreciate it. And 2, if you want to join a free Discord group with me and many other people who are looking at crypto charts every day, and if you want to ask me more questions, that's definitely the easiest place to reach me. I have a link to my Discord in the description below. It'll be free forever, no worries on that, so feel free to come join and hang out with all of us. So with all that being said, thank you so much for watching, and as always, good luck trading.